Okay, well, I think we'll get started. Well, welcome everybody. Absolutely thrilled that you're all here tonight for our first webinar in our Make Money, Save Money series. And we knew this would be a popular one, and it sure is. And we're really delighted tonight to have Michael Kadoury with us to explain government grants and how you can access this pool of government funding for your business growth. And I've been privileged to know Michael in a professional capacity for over 15 years, and we're very lucky that we have him tonight because not only is he a grants expert, he's also a lawyer, but what gives him a bit of extra expertise is he's also an entrepreneur and investor, so he knows exactly what we're going through as entrepreneurs as we are dealing with the challenges to grow our business. So I'll pass it over to Michael now to introduce himself, and I'll bring up his presentation and we'll get going. So thank you everyone and welcome. Welcome, Michael.
Thank you, Miriam. Yeah, look, I mean, as Miriam was saying, I'll just give you a bit of a background on myself before we get going on the grant side. By background, I am a lawyer, although I was always a bit too entrepreneurial to be a plain lawyer or a straightforward lawyer. So by the time I was 26, I actually had 2 startups of my own, which I exited. I also ran an incubator for a large Japanese company in Australia for close to 10 years. So in that time, that was in the software space. So in that time, we launched over 40 software startups, and I got involved with all sides of software, right through from sales, managing development teams, and of course doing the legal side, right through to the finance side. So got quite involved you know, from all angles of software, and I quite understand that space and startups generally. Today, I've helped quite a number of companies go right through from the concept stage right through to commercialization and exit. I myself am also an angel investor, and I help companies expand internationally. So right now I'm actually in Israel, where I do quite a lot of work here with startup companies. I spend most of my year between Australia, California, and Israel, which makes sense in terms of this space. I still can't see the presentation though.
Okay, I'm going to bring that up now.
I don't know if can others see it and I just can't, or?
No, let me have a look. There it is. And
beautiful. Yep, I can see it now.
Okay, fantastic. All right.
Wonderful. So in terms of KWS Advisory and our team, where we come in is helping companies, I mean, not just around grants, but really getting founders and entrepreneurs, helping them through from that concept stage right through to commercialization and through to the exit stage, and getting them investor ready as well. And being in Australia, one of the big advantages Australia does have over most other countries is the quality of grants that there are. And I think any Australian company should try to tap into that where they can, because it does give us that edge over most other countries. So if you can jump to the next slide. One of the key areas where I found that helping companies get grants was not just treating them as, okay, here's an application, let's apply for a grant and submit. I think, you know, doing that can get you some money, and that's wonderful, and we'll get into some of the grants in a second. But it's also treating it as a tender, as a sale, which can just maximize the amount you get. So there's I guess 5 things that I've looked at which become quite relevant when looking at a grant. And that is treating it as if you're doing a sale. I mean, when you are applying for a grant, it's not just, okay, here, submit a form. You're actually selling yourself, you're selling your concept to the government. And you know, each person in the process of allowing that grant through, right from the public servant on the front line, which is going to let it through the gate, right through to the minister who wants that one-liner at the end, you know, government gives a grant to the latest, best thing that's out there. They're all looking for, if you treat that like a sale, it just gives it that edge over a lot of, you know, other people who just put in the submission. Of course, understanding technology or understanding that whole space when it is a technology-based grant becomes very relevant. Understanding the numbers and the finance side of it and just getting that done in the right way will also maximize the grants. Legals is a big part of it, and that's not just the contracts and protecting the IP and those things that need to be seen, but it's also the corporate structure. Because if you've got the right structure, Again, that will help maximize the type of grants you can get, the amounts you can get, and will just get you through those gates a lot easier. So it's very important to get the right advice and the right structure done early on, even before the business is launched or before the project is launched. It's very important to get that structure right. And of course, just making sure that there's the right project management throughout the process, being able to work with government in the right way. So that's it from a high level point of view. If we can again jump to the next slide. So in Australia, I'll talk from a very high level and work down. There's quite a number of different grants that are out there. From a very high level, there are the non-for-profit and the commercial type grants. I'll mention that the non-for-profits are there. I won't spend too much time on them today, but sometimes they do become relevant. I've had commercial projects that had an element of non-for-profit or community-based things attached to them. So it's good to know that those grants are there, and if whatever projects people have may be relevant to that, it's good to know that they're there and see how they can tap in. Within the commercial type grants, there are three broad areas. There are the upfront type grants, which tend to be competitive in nature. There are the rebate type grants, which are more of a process type thing. And then there are the pure research type grants. And from a high level point of view, the way those ones work is I'll start with the simplest one of those, which is the pure research one. They're much more relevant for long-term research. They give you the best bang for buck in terms of the amount of money the government puts in against what you would put in. So, for example, when we're looking at the ARC linkage grant, which is a pure research grant, normally working together with universities, you would need to get a professor from a university, a university professor involved with the project, and these projects tend to take between 3 to 5 years, and they're very, very high level type of research. However, when you put in $20,000, the government will chip in 80, so 20-80 in terms of the ratio that comes in. The biggest downside of them are that they take more than a year to get through the application process, sometimes as much as 2 years, because you're dealing with state, federal government bureaucracies plus university bureaucracy. So it's as bad as it can get in terms of the level of work that needs to be put in. And again, it's about managing that once it comes through. So those are great for the side projects. I would not recommend them for the core project of a particular grant. Now going back to the other two areas, the upfront type grants, there is a number of grants that fit into that criteria. They're really going all the way from the big federal government type grants right through to the small local council type grants that are out there. And as you can see on the slide, there's quite a number of them. New South Wales government has a number, and again, if people are in other states, there are similar ones for each state. You'll actually find that the smaller states, or the ones that are trying to attract work, will give more money. So it is worthwhile exploring it and talking to the right advisor and experts to see what is available in your particular state. In terms of the advantage of those ones is that you will apply for the grant, but if it comes through, the cash comes in upfront. Often they're about a 50-50 matching, again, depending on which grant it is, and there's quite a number of ones there, so I won't go into any specific ones here. But the big advantage is if you can apply for it and do the right things, once the money comes in, then you can plan ahead. That's the big advantage of them. The downside is that they can take, again, between 3 to 6 months to get a good application in. They are competitive in nature, and you may put in a lot of work not to get them. So I do recommend, again, assessing whether you're eligible. The biggest ones to look at within the federal realm would be, I'm just trying to see if they're on the list because they've just come out again. So there's the old Commercialisation Australia grant, which has just been renamed to Enterprise. Sorry, I've just forgotten the name suddenly.
Infrastructure.
But, yes, Enterprise Infrastructure Program. Thank you. So that particular one is exactly the same grant as before. The way that one works is that you would get up to $1 million from the government. It is a grant, so not a loan compared to other countries. And it's a balancing act between showing that the money is needed to get a innovative technology or product out there, that is mature enough, but it's not that mature that the money is not needed. So we've got to, on the one hand, show that the money is needed to get through that stage, and on the other hand, that there isn't too much money out there, that we don't actually need the government's money in the first place. Now, if we can jump to the next slide. Oh, no, sorry, before we do, just talking about the first two grants that are on the list, there's actually a whole range of grants that are more of a process type grant. The biggest two that we've got there are the Research and Development Tax Incentive, that's the R&D Tax Incentive Grant, the Export Market Development Grant, which is the EMDG. There's also the Producers Offset, which is more around film, and also gaming and animation. We've been able to get a few companies through that door. And then there is the big scheme, which also works with the Textile Clothing and Footwear Grant for anyone in that industry. All those grants work quite differently in the sense that if you spend the money in the right way and you've got a corporate structure that is in the right way, you know that X amount of dollars will come back the following year. So it normally works within a financial year or within a calendar year. And once you've put X amount of dollars and have the right records, you can apply for the grant and should be able to get that back. So the most relevant ones for startups in Australia, and the most common ones used, are the R&D tax incentive. That effectively says for every dollar an Australian company spends on developing some new innovation in Australia, they will get back additional tax losses as a starting point. So a company goes and spends $100,000 on R&D, they will then get $150,000 of tax losses. This is, using a basic small company, they'll get $150,000 of tax losses to use as a company. Now, the issue is that a small startup often doesn't need the additional tax losses. You're probably losing money in the first couple of years, and that's quite useless. And the government recognized that, and they said, right, if you fit certain criteria, if you're small enough, which basically says you're under a $20 million turnover as a company or as a group, you can convert that to cash. So effectively, for every dollar spent, using the Australian 30% tax rate, 45 cents in the dollar can come back in cash to the company the following financial year. So quite attractive, quite a good program. A few things to watch out for in that program, which is, firstly, it only applies to companies. In other words, not having a structure which is a trust or a private partnership or anything like that, that will automatically knock you out. So, and that's why I go back again to my first point, which is having the right corporate structure is critical. Having the right contracts in place with all your employees, contractors, even if the founder themselves is drawing a salary, important to have the proper contracts in place and actually pay that salary out within the year to show that it's done all correctly. So, that's where again, the structure and the contracts all have to come into play. But again, the advantage is if you were to draw a $100,000 salary yourself to develop the technology and keep the correct records, there's nothing stopping the company from getting back, again, $45,000 in that scenario in cash against that salary. So it is quite attractive if done correctly. The other thing to keep in mind, though, is that there are two steps to this application. The first one is a technical application, which goes to AusIndustry. Effectively, what we do is we pull together all the records, looking more at the technical side of the project, and submit that to AusIndustry to prove that, one, it's an innovative project, and secondly, that it fits all the criteria to be eligible within that grant. Once that is approved, then the second part of the application actually goes to the Australian Tax Office, which looks at the numbers side of it. If approved, and again, if it's a cash rebate, then the refund actually comes through the tax return, and you'd get that back within a few months of the end of the financial year if done correctly. The downside of all this is that there could be two levels of audit. There could be a technical audit from AusIndustry, and there could be a tax audit from the ATO. And again, why I go back to say, very important to get the right records, to get the right processes, systems done perfectly, so that once it's submitted, it all goes quite smoothly. And they could come back, as late as 5 years later, knocking on the door saying, okay, what have you done here? So, it's all good and well to put an application in, but it's important to just know that it's all done perfectly, put it to rest, and sleep easy again going forward. From the EMDG point of view, that effectively comes in as a stage 2 for most companies. That is talking about an Australian company which could be, or Australian entity, I should say, which could be exporting anything from a service, product, or even a piece of IP internationally, with the exception of, I think, 3 countries. Anything sold outside of Australia is in. The 3 countries that are exempt are New Zealand, North Korea, and Iran. Any other country that is exported to would make the entity eligible for this grant. Now, this particular grant is open to a lot more type of entities. It is open to a partnership. It is open to trusts, as well as companies within Australia. Most startups would fit into this category. The cap on this one is $50 million turnover per year. So, that really knocks out the bigger players, but most startups should be okay in terms of the eligibility criteria. And the way that works is, for every dollar a company spends on marketing or opening a market internationally to promote its product, service, etc. internationally, they will get back up to 50 cents in the dollar from the government. Now, the definition of what is a marketing expense is quite wide. So it's everything from your flights overseas, right through to hiring someone on the ground overseas, paying for a website to promote the company or the product internationally, right through to AdWords, Google AdWords, those kind of things. So I've seen a real big range of the type of things that can fit in. A lot of people think that they may not fit in just because, for example, some of their products are done overseas. So I've had clients who are in the clothing industry, which is the most common one where this question comes up. If they come up with a design in Australia and the product is actually manufactured, for example, in China, that doesn't automatically mean that the product is not seen as Australian and then knocked out. If we can show that there are enough benefits to Australia coming back, so for example, most of the revenue is coming back, the core IP is designed in Australia, the amount of the quality of staff in Australia, all those things can come in to help prove that the product is still Australian. And in that scenario, in theory, you could design a piece of clothing in Australia, manufacture it in China and send it direct to your clients internationally, and it would still fall within an Australian export, and therefore open the door to these grants. And that applies to all other industries. I mean, I've had that come into things in the software space, right through to the insurance space. So it is quite wide. In terms of the record keeping, it is quite onerous. Most of these grants have, I think it's actually 100% audits for the first time applicant. And after that, most companies will still have some form of audit. So it is important to keep, again, good records. The good side, though, of it is once an audit has happened and the money comes through, it's there. There's no danger of anyone coming back afterwards and asking questions of, was it done correctly in the first place? So there is that advantage. They do look at cash accounting for this one. So it's not good enough to just say, okay, I've spent $100,000 promoting the product in America, and here's an invoice. You've actually got to show bank statements and payments going through to the end, whether it's a consultant or the end supplier, to show that that is an eligible expense. So going back to the type of things that fit into that category, it's really everything from your flights overseas. I've had clients that they themselves have moved overseas to promote their company. So I've had a software developer who was originally had a company based in New South Wales. They decided to move to the UK to help build up the market over there. Once that was done and they were paying themselves, the company, the Australian company, kept paying the founder and the owner a salary share. 50% of that salary came back from the Australian government. So again, if it's structured correctly and the contracts are right and we can prove that they're doing the right things, it's an excellent program to assist. There is a cap on this grant of $150,000 a year per company or $250,000 per group, and it's open to up to 8 years from first applying for it. The very first year that one applies for it, you can go back 2 financial years. So that's really to help the smaller companies who are initially spending money to do things hit that minimum amount, so it's worthwhile applying for the grant. So in terms of other things that fit into that category, as I said, there's flights, there is consultants, there's also Australian-based expenses that could fit in. So again, things like helping create a strategy to hit a particular country internationally, that could fit in even if the supplier for that was Australian based. And in the first couple of years of applying, you don't actually have to show revenue against or to be eligible for the grant. So if you show an intent and a genuine intent to export your product or service internationally, and there has been no revenue coming in as yet, that is still okay. So, and that's quite common for most companies. You're spending money first before you're going to get a client through the door. So, and they recognize that, and they say, okay, fine, you spend $100,000 to get it into that market, had zero revenue, but here's $50,000 coming back. So again, that gives the an Australian startup a big advantage over most other companies that are coming in from other countries in terms of the support the Australian government does give us. Okay, we can jump to the next slide now, if that's all right. Okay, so in terms of the types of grants we were talking about, looking at the advantages and disadvantages of the different grant types. The competitive grants, as I was saying before, the big advantage of them is that the money does come in. It does need to obviously meet all the criteria. There is a reliance on obviously the government liking it, and it is a much more of a sales process in terms of when an application comes through. The money the big advantage is that the money comes in before you spend it. But the hardest part is getting through that criteria or the competitiveness. So it really comes down to also not just how good you are as a company, as a story, but also who is competing in that round. And it's very, very important to get the right advice, have a look at what they're looking for in particular times. There's sometimes hotter topics. For example, some software might be particularly interesting one round, and manufacturing becomes more interesting 3 months later when the next round comes in. So getting the right advice, having a look at what's going on is quite relevant here, because you're competing against other companies like yourself who are trying to get their hands on that money. Where the non-competitive grants, the rebate type grants, if it's structured right and done correctly, the money is going to come in. With the biggest disadvantage, of course, being that you do need to come up with the cash first and spend it first before the rebate comes back. I've had situations, and I'll kind of jump into it for a second. I've had situations where it has helped us open the door to investors coming in if you know that grants are going to be available. So, and that's really for both grants. If I've got an investor coming in from the US looking at Australian companies, I've had that as a real scenario recently, and they saw that if they put in $100,000 of investment, at worst case scenario, the Australian government will kick back in, let's say 45 cents in the dollar. It made the entire decision process a lot easier when they looked at the Aussie company. And we've structured things in such a way they said, okay, look, even if the company fails and the rebate comes in, we can secure some of their investment and they'll have first right to that investment as an investor. And that, again, made it more attractive. So if it's structured right, it's not just about helping you as a company do it, but it can also help quite a lot in terms of getting that investment money through the door and doing those kind of things. If we can just jump to the next slide, I think I've kind of covered that anyway. Yeah, I did. So that's the, again, going through the advantages and disadvantages of the two type of grants that are there. I did mention in terms of the rebate type, I'll put aside the manufacturing one purely because the government is moving away from that one, and they're probably going to close that off within the next couple of years, and that's the one I mentioned, textile, clothing and footwear. However, the producer's offset, I'll just quickly mention it, and if anyone wants more, I'm happy to discuss it further in the question section. That one pretty much applies to when people are creating or filming something in Australia, a documentary or film, can give anything from 20% to 50% of the money that was spent in Australia on the project. So if you remember the film, the feature film Australia, when that was done, they spent $100 million on the film and got a $50 million rebate from the government to do that, because it was seen as an Australian film, filmed primarily in Australia, and therefore it was eligible under that grant. But again, there's a whole range of grants that fit into the film industry. And when we're talking film, though, we've been able to get in companies that do either animation, and I mentioned before gaming as well. So it is worth looking at, depending on what you're looking to do, even if you're not just a straight company that's creating, that's doing a film or anything like that. Okay, if we can jump to the next slide. Okay, so the biggest question is, should you or shouldn't you really apply for a grant? And I've seen some horror stories, and that's why I kind of always ask people, don't just jump at it because it looks like easy money. I've had clients of mine where the biggest revenue earner for their company in that particular year actually ended up being myself. And I said, no, you're doing something very wrong if that's the case. First and foremost, make sure it strategically fits the business that you're in and pushing you in the right direction. Is it going to distract you from your core business? Is the amount of money that's going to come back worth the amount of work that's coming in? And that can be anything. As I said, there could be grants as low as a $5,000 grant coming in from the local government, right through to the multi-million-dollar grants. But that's, it really comes down to how much of your core team's time is necessary to get that through the door and how much of a distraction it does become. You don't want to become a company that's effectively chasing grants, which becomes their entire business. You want to make sure that the grants are there to support the core strategy of the business. So, and I often sit with new clients and say, okay, what is your strategy going forward? What is your exit strategy? What is your commercialization strategy? Are we helping you get there, or is this becoming a distraction for you? So you need to look at that yourself to start with. Again, sitting with the right advisor, they should be able to sit with you and say, okay, right, is it right or wrong for you? With the rebate type grants, the big advantage again is that you can look at how much of a rebate should come in at the end of that financial year or that year, and you can make a decision. Okay, look, if it's only going to be a $20,000 rebate, does that warrant us doing this? And that really varies for every company. I've had clients of mine that that $20,000 is an absolute lifeline and gets them right through to the other side and helps them establish themselves as a new business. Where on the other hand, some companies look at $20,000 and say, well, it's an absolute waste of my time. It's going to require X amount of hours for my CFO. Not worth it. Not worth the processes. Not worth what we're doing. Sometimes it is worthwhile going for a smaller grant though in the first year, because you effectively set up yourself to do the systems correctly, to keep the right records, which means that as the company grows and as the grants get bigger, the systems and processes are there, the staff are already trained up in terms of what they need to do. And again, it's all about maximizing the type of support you will get going forward. So those are the type of things that do come in. And again, I'm more than happy to discuss it further in the question time. Okay, so if we can jump to the next slide. Really, it's important to look at which grants you're looking for. There's a few links we've attached over there, and everyone can have the presentation later. Those are the wider ones that the government supplies. You don't always need support on every grant. I mean, as I said, some grants may be as low as $5,000, $10,000, and it really requires a one-pager to submit that, and you can do that yourself quite easily. So it's worthwhile looking at those links, seeing what is out there, and looking at them regularly. If I've had clients who are in the servicing in the library space, so you type in the keyword library and see what comes up, and you might suddenly find that the state government or a local government has put in a new grant around that space, and they will give it to you. I've had clients all the way from someone trying to build an electric car, right through to someone creating film, gaming, and services type industry. So there is no limit on what there is out there. It's really being consistent, having a look at what's come up recently, knowing those keywords that relate to what you're doing and what your business is, and seeing what comes up. And as I was saying before, there are also the non-for-profit type grants which will come up on those grant searches. So, as I said, in that particular case where I had a client they were building software in the library space and indexing, etc. But a particular grant that was there more towards the non-for-profit did come in and assist them in that sense, because the money came into the library and the library was able to spend that money on their company, and effectively the revenue did come into their hands to develop their software further. So step one, have a look at what you're after. Where relevant, talk to an advisor. I mean, if you're going again for the bigger grants, or if you're going for the more process type grants, definitely worthwhile getting that advice early on, and don't wait until after you've spent the money or after you've launched the business. It's quite important to do it early on. I will like to often sit with my clients a year before they've started launching, so we can talk about, okay, look, this is the way you're going to structure the business. Sit with their accountants, their advisors, making sure the structure is perfect, making sure that the way the invoices are coming in is done right. Make sure the way the bank accounts are set up, the way the money is spent is done correctly, so that when you do get through that process, all that will be, piece of cake in terms of putting the application together and coming through the other end with a particular rebate. So, particularly with the rebates, worthwhile talking to an advisor. And again, for the larger grants, definitely worthwhile exploring. And getting the right advisor who knows that particular grant. I'm not saying that anyone knows everything perfectly. It's finding someone, if you're a technology company, it's important to find someone who can understand your space, what you're trying to do, what you're doing. If you're in the clothing space, it's someone who can understand those particular grants and how to structure things to maximize them for you as well. Okay, if we can jump to the next slide, I'll give an example. So we've got here a real live example of one of our clients and how they started with us. So again, this was a company in the software space, particularly. They had some hardware involved as well in what they were doing. Two guys rang me up out of the blue. They were literally working out of their garage, typical startup, no budget, saying, okay, look, we've got an idea. This is what we want to do going forward. What can we do? So we looked at it. We set up, again, sat with their accountants, sat with them, structured the company correctly. And the first one we went through was the R&D tax incentive, which was available at the time. And initially it was, as you can see there, we got them a $50,000 rebate after the first year. The R&D grant works on financial years of the company. So they particularly had a January-December financial year end. Most of our clients in Australia have a June-July financial year end. And the cutoff for the application is 10 months from the end of the financial year. So even if you were to set up your company today and you spent a couple of months worth of expenses before the 30th of June, theoretically, you could put a submission in on the 1st of July and get a rebate as early as August, September, based on even those few months of spending. There is no minimum amount that needs to be spent. As I said, that one effectively goes through the tax return. So in their particular case, the first particular year was really their salaries, what would have been their salaries, and they drew that out properly through the company, and a bit of their rent, because all they were doing was R&D in that year. So we got through the application, put a submission to Oz Industry, and then it went with their tax return. And in year one, they got the $50,000 rebate. If we can jump to the next slide. Okay, so what then happened is, as the company evolved and was getting through, okay, right, we've built a product. Now it's time to try to sell it and promote it internationally, and that actually happened, I think, within the second year of their business already. And again, the product wasn't perfect yet. It wasn't complete. No software product is ever fully complete, but it was enough to go out there and start promoting. So even at that early stage, they were saying, okay, right, we've got some things we're looking to do. They had some investors already who started coming in through the door, so they had money to spend and do things in that sense. And most of their claim in the first EMDG rebate was based around the websites, the things like Google AdWords, and a few flights overseas. So effectively, I think they spent in the first year about $90,000 on promoting themselves. Actually, I think within that there was also a overseas representative, so someone on the ground in a particular country. They paid them a salary to go and try to promote them, and it wasn't a full year of it, so that's why it was quite low. And again, after the first application, they got an export market development grant rebate of $40,000, and in that year, as the R&D expenses started to grow, the rebate there started to get a bit higher, so they got $150,000 of R&D tax rebate. The big advantage for us, though, as well, is when we start with the rebate type grants, we get familiar with the company, the product, and the innovation, and then we can recommend, okay, look, here are some upfront grants that could apply to you. So it might not be obvious on day one. The records might not be perfect on day one, but as the company is getting better at doing their R&D, they'll actually find that a lot of the things that are required for these upfront grants get created. And when I'm talking there, I'm talking things like everything from a business plan, marketing plan, proper contracts. All those things need to be there to submit an upfront grant for those kind of things. Okay, if we can jump to the next slide there. Okay, and that's when, around that stage as well, is when the New South Wales government came in with a particular grant to help New South Wales-based companies develop things further. That particular grant is still available today in New South Wales. There have been different iterations of what the grant is every round, but effectively it's to help innovative New South Wales companies do collaborative projects to get their projects up and running. So again, we got them $100,000 Innovate New South Wales grant. That particular year, there was another $70,000 of EMDG rebate, and as you can see, the R&D just grew and grew and grew each year going forward. So that all worked quite nicely together to support the business. And again, very important to note, it didn't become their core business. The company itself kept growing in a natural way, but by that point, a lot of the processes became quite good, and therefore they were able to get the rebates almost automatically, because they, it's by the third year it just becomes a process as opposed to trying to create anything new. But it also then started opening the door to these upfront grants. Okay, if we can go to the next slide on them, and then. Right, that's when we jumped into the Research and Business Grant, which is a federal government grant. It's all part of the family of the federal government grants that are out there, and we got them a $50,000 grant in that year, again, to help promote the innovation and help commercialize it a bit better as well. So all those things came in. I don't think we've got on the slide, but actually since then we've also been able to help this company as it grew to do an Australian Research Council grant with the university, and that's become a side project for them, as I was saying before, the long-term project that sits on the side and is more around the risk type work that they're doing there, or the riskier type of research that they were doing there. Okay, I think if we can jump to the next slide there, if there's anything. So by the end of the project, as you can see, if you add all those grants together, here was a small company getting support throughout the whole process. Yes, there were a couple of competitive grants throughout it, but by the end of it, they got, well, actually over $1.2 million in government funding to help them get from that, again, concept stage right through to the commercialization stage. And right now they're going through a capital raising, and hopefully we'll have an exit coming through quite soon for them. Okay, next slide. So just to summarize what we kind of went through, very important to decide which grants to go for first. Sometimes the competitive grants are relevant depending on what you've got available, how much work needs to be done to it, but quite often just to start with the eligibility type ones or the rebate type grants first. Very important for each one of you to look at where the company is, what you're trying to achieve, and assess the cost benefit analysis of doing the particular grant. Understanding the grant process. Any advisor that's out there that's that you're going to, really it's important that they run you through the process and work with you as a partner to teach you how the grant works. For me, it's always been quite important that it's not just about, okay, look, give me the forms, let me submit for you. Where's the company? We'll sit there, we'll train all our clients up to really understand the grant process, and they know what they're in for. And within a few years, quite often they should be able to do a lot of it themselves if they don't need to use us. So it's about training you correctly to keep the right records, to know what things need to be in place to get the grant. Okay, so and finally, the grants really are there to help you get to where you want to get to. So again, being part of your strategy to get you there. So I think we've got enough time for questions. Okay. Left us, how many more minutes have we got?
We've got a couple. We can have about 5 minutes. So I can see people are putting some questions in the Q&A. As I mentioned, you'll be getting a copy of this presentation with Michael's details and also his colleagues in Sydney's details for any follow-up that you want to do. So let me just see what we've got. Okay. Here we go. I'm developing concepts in preparation for working in the emerging wearable space. I noticed in the grants breakdown that there are grants in both innovation and technology. Can there be additional grant support in areas like the clothing manufacturing grants? Because it crosses obviously the two spaces. That's one question. Did you want me to keep going, Michael, with a few questions? Can you hear me?
Yep. So Yeah, I just couldn't hear clearly, but I saw the question, so I'm reading it through now. Look, the short answer to that is there have been, I think I mentioned there was the BIC program and the textile clothing and footwear programs that were out there. The government is looking to pull a lot of those back because they decided they don't want to support manufacturing as much in Australia as they did in the old days. So it really comes down to whether there is anything innovative in what you're looking to do, as opposed to just, and I'm not saying just, but developing or producing clothing in Australia. So if it's, if there's new R&D there, you could definitely still fit into even the R&D tax incentive type grants, right through to the commercialization type upfront grants that are out there. In saying that, in the textile clothing space, there is still, one more year to run on the current program, and we're waiting to see what the government does with that going forward. So it is about watching the space and seeing what's going on. But right now, I wouldn't recommend spending too much time going for those if we don't know where they're heading. If the government's going to yank that back next year and you're going to put a lot of effort to try to get yourself ready for it, it may be quite a risky process. So there are some smaller ones. I think there's up to a $50,000 one for innovative technologies or improving your business around the clothing and footwear space, textile clothing and footwear space, which is worthwhile exploring. Otherwise, I'd say go and look at whether you can fit what you're looking to do, your project, into one of the wider grants that aren't manufacturing specific.
Okay. Any tips on where to find good advice or advisor in the clothing accessory industry to work with the Aboriginal community?
Okay, so you've hit a couple of topics there, which is, just talking about Aboriginal communities, there are already some grants specific to that industry, to that community. So again, looking at that website I mentioned, it is worthwhile just typing in Aboriginal clothing, for example, type in those two words, or even just things that are specifically for Indigenous Australian communities. It's worthwhile typing in those keywords and seeing what comes up. I don't know of any specific advisor who's an expert on that space. I think you're going to find that because it's such a niche area, you're probably better off just doing those yourself and then going to the right, to someone else, an advisor, to say, okay, look, can you assist us with our application and review it? So the way we work as a company, we can either work with clients and do their entire application, or quite often, if it's someone who knows what they're doing and they just need a couple of hours of advice, they can pay us for a couple of hours advice here and there. So it's, here's an application we've got ready to submit. Can you please review and improve it for us? So you'll find that the better advisory firms out there should be able to do that for you, even if it's not specifically to the areas they touch.
Okay. A lot of funding programs being discussed seem to relate to a product that is being sold. Are there any funding streams that relate to a transactional business, like innovative training program that takes place face-to-face but is managed via an online platform?
Okay. There have been in the past, and it really, a lot of these grants are subjective because it's subject to who the government is and what they feel like at any particular point. So yes, there have been some a few years back to help train. I've gotten one for a client of mine going back about 5 years, a $300,000 grant to help them train musicians to become better business people, for example. So that was available. A few years back, they had one which is Training Women in Business grant. And again, that was giving money to a company that was creating programs to help them achieve that. So it's about watching what's out there. There isn't anything that I'm aware of specifically to that today. The general grants that are there, the ones that are ongoing and are open most of the time, tend to still tie back to either a innovation or a product, with exception of, as I said, the export marketing grant that can relate to a service. So if you're talking about training people internationally, we've got clients that do that. And when I've even had a educational institution in Australia apply for the export marketing grant. So to promote their institution internationally to attract students to Australia, that is an export, and that is an export expense, and therefore they were able to get back 50 cents in the dollar on what they spent to promote that. So things like that will definitely apply. If you're taking your innovation and embedding it into an online platform, you might find that there are elements of what you're doing, integration, some software development that could still fit into R&D, and therefore you may be able to pull yourself into some of those innovation grants. So again, very important to talk to the right advisors there. In that particular case, it's probably important to find someone who's got a technology background. So with us, the CEO of our company in Australia, Gary Shapiro, who he's actually a software engineer by background. So he looks at those things more from a technical point of view and say, right, can I fit this in technically to fit the criteria to be an innovative product as opposed to just a service. So if you can get through that threshold, you might actually open the door to a lot more grants.
Okay. Regarding the R&D grants, to date, over the past 2 financial years, we've raised approximately 110,000. However, there is an explicit list of categories for eligible. Is there an explicit list of categories for eligible expenditure to make the submission easier?
Okay, there are. Okay, it's quite a complex area, and so I can't just give an answer simple like that. Yes, there are, but because it's tied so closely to the tax side of things, it does become complicated. So I myself, aside from being a lawyer, I'm also a tax agent, and anyone who gives advice on R&D must also be a tax agent. So very important that you find someone who's licensed as a tax agent before they give you this advice, because it is going into your tax return. So again, just like if you had an expense and you paid a $20,000 to a charity, sometimes it's claimable, sometimes it's not. The same thing applies here. Some expenses may appear to be eligible, but if you got the wrong thing done, for example, the contract's not done in the right way, or the money was spent in the wrong way, it won't be. So generally speaking, I am talking at a high level because, as I said, because it's tax related, I'm scared to kind of give any specific advice. In this kind of forum, but anything from salaries relating to the R&D project would fall in, right through to a percentage of your rental costs, right through to licensing of software or technologies to help achieve what needs to be done. I've had clients in the mining industry where they had to buy a specific motor vehicle to test out their R&D project, and the cost of the vehicle, the depreciation of that vehicle, was claimable in each year. So it is very wide in terms of what could fit in. The key to all this is the project, firstly. So if you can define what the project is in a wide enough way, and the wider the project, the more expenses that will fit in, the more money you'll be able to claim going forward.
So I did have one question, which I'm sure a number of people will also have. How does an advisory firm like yours structure the type of advice? If someone's coming, is it an upfront per hour fee? Are they paying for the full grant on success? So what's the actual structure that most advisory firms would work on when dealing with small businesses?
Okay, look, I can speak to the way we do it ourselves. I think you'll find a combination out there in the marketplace. We work right through in 3 different ways, which is, for some companies, they prefer just a flat fee. Others will do a percentage, and for some, it's an hourly rate. So, for example, if it's a first-time applicant where you're going to need a lot more of our time to kind of guide you through, to teach you how to do it, I would highly recommend working on a percentage model. So it's a pure success fee, where we do all the work with you. We'll spend as much time as needed. As I said, we'll even work a year before we even look at submitting anything, look at every invoice that comes in, look at every contract that comes in, advise you on how to do that. And once the submission goes in and the rebate comes back, we take a percentage of that. Our percentage works in a sliding scale. So in the very first year, because there's a lot more work involved, we take a higher fee of 20%, and that drops down to 10% by the 3rd and 4th year going on. So in recognition that it does get easier in the ongoing years, because it does become a process, our clients become more educated in how they do it. I've also had clients, though, that say, look, in the very first year, we want to work on a percentage model because we don't know what we're doing. Going forward, we know where we're kind of heading. We actually just need a couple of hours of your time maybe to give us a practice audit. What we do with those ones is we'll just charge them by the hour. So it really varies. As long as we know at the beginning of the year which way each client wants to work, we're happy to change that from year to year. Just to run you through what we do when we do an application, and every firm is different, but we've had 100% success rate because we do it this way, so I'm happy to say that. And that is, it's not just about, as I said, preparing you is one thing. What we then do is, before any submission goes in, we actually do a practice audit
on our clients. So with either me or one of the other advisors will come in and look at the file as if they were themselves an auditor, and assess the application and ask the hard questions, grill you properly in the way it works. Once we're happy with that, and if you can answer everything correctly and it all goes through, we then put the submission in. Then, depending on the type of grant it is, if an audit does come in, we then do another practice audit, depending on who the auditor is and what kind of things they're going to focus on. We will, again, sit with you, prepare you for that, do another practice audit before the real audit, and go from there. So once you kind of go in there, it should be quite an easy thing. For things like the R&D, it means that hopefully you never do get audited and those documents sit in your bottom drawer for 5 years and that's the end of it. But at least you know that if anyone does come knocking on your door, you're ready and you can answer any question that does come up. So, especially in the first few years where you may get an audit and it's going to take a lot of hours, I do recommend looking at more of a success-based model than a hourly rate, because, if an audit comes up, it can suck up 20 hours very quickly of an advisor's time, and then you could find yourself paying a lot more than you should, and I don't like to work that way either. I mean, I hate looking at the clock when I'm trying to help a client. So it's much better to work that way in the first couple of years at least. Once you've done it, once you've probably had an audit and the process is easy, you can always change that through. For some of the upfront grants, we do have to work on a combination. So it's either one flat fee up front or a combination of a small upfront fee and a percentage as well going forward. So really, depending on the type of grant, some grants don't allow it. So we've got to look at each one, but those are the three ways that often work.
Thank you. We've had a number of other questions which we'll actually take offline. Michael and his colleagues Leo and Gary have actually agreed to look through some of the questions and answer them offline. Either individually we can contact you, or we can actually create like a bit of an FAQ kind of sheet and send that with the recording of the webinar. So I just wanted to thank Michael so much for his time tonight and for his expertise. And it is a big subject, and obviously everybody in the chat room tonight has different businesses and different needs. And so I please encourage you to get in touch with the guys, or you can email me and we can pass on any questions and see how we can help you further to grow your business by taking advantage of the Australian grants. So thank you very much, Michael, for your time, and thank you everybody for joining us tonight. These webinars are going to be taking place fortnightly, and we'll be bringing a whole range of different topics to help you grow your business, to make money and save money. So thank you everyone for your time tonight. Thank you, Michael, and we look forward to helping our community to grow and prosper. So to everyone's success, have a good night. Thank you.